The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Happy Monday. I hope you had a great weekend, great long weekend, great July 4th. We had a big storm on the 4th, but events were planned and done on Friday. It worked out perfectly. The storm started actually as the 1812 would have been ending, in fact, just as the fireworks were ending. So that worked out well. 7/7/14, and we're about to start the new week. Where we have had an hour and a half of the trading begun. And thank you, Steve, for 2 great hours. And now let's go right to the market. Dow's down 62 at 17,006. S&P is down 8 at 1977. Fascinating that the market opened very quietly down, had a bit, tried to rally, and then pull back. The stealth rally on Friday, that Thursday in that half-day session, that was very interesting. It was very good action, but it was done without people in the room. Basically, it was a very quiet session, and but it does count. Price-wise, that was very good. So now I'm looking at gold, and this is very interesting because gold, which had been holding well, has suddenly taken a little bit of a dip and is down at this point, down 5 at 13.50. No big deal, but it is down. And what's interesting about gold is that if you look at the GLD, what you will see is that it made a peak E in that kind of toppy motion, a rounding top motion, and now it's sitting on the 200-period exponential moving average at 126.51. The GLD's down 65 cents. It looks to me as if the MACD's holding well, stochastic's holding well. 120-minute chart just made a Chapman Wave flat-based restart, a G. And what we're looking at is that the weekly chart is really going to be key because 125.34 on the week is going to be very important support. So close on Friday below, let's call it 124.50, give it a little room. It's only 2 points down. That shouldn't be a big deal either way, up, down, 2 points in the GLD. But if it's down, what it says is that the 200-period exponential moving average at 126.50 area, very strong resistance now rather than being support. If by Wednesday or Thursday, the GLD is at 127.5 to 128 or above 128.24, that's very positive action. That really improves the weekly chart as well. Even improves the monthly, even though the monthly is month has just begun. So when I look at the silver chart, which is minus 0.17, let me just go to the SLV. I can't remember if I did get to update that. No, I didn't. So that's A, B, C, peak D. No, I shouldn't. Yeah, it's a peak D. It's not a top yet. It's a peak D. Watching real closely because there again on the SLV, that's the silver iShares. This is the contract that you can trade instead of trading silver itself or the futures. And the SLV is trading at 20.09, down 20 cents. And that's sitting on the 9-period moving average, just above the 1998 200-period moving average support. Going to be very interesting where silver closes. So far, gold and silver had very nice moves and very nice high-level consolidations. Breaking down from here would be something else. You've got silver. We've done platinum is up 63 cents at 14.97. High-grade copper is taking a bit of a dive today. And one of the reasons I looked at copper over the weekend and decided that the trade we were going to put on with the copper stock, I need to see some further evidence of strength because it's been fabulous to now. I want to see that some kind of support at 3.22 in the continuous contract. Now, this is interesting because the weekly contract is in leg D. Weekly continuous contract is in leg D. the daily is making a possible peak B. But when you look at the U contract, HGU, although it's the same sort of thing, the same chart formation, what is interesting is that you can see a little bit more evidence of support in that the MACD is holding very, very well, and the stochastics at 96%. So I'm looking at copper and I'm saying, hey, copper, you're doing quite nicely here. So let me do a couple of other things. The copper went to the D in the U contract. That's the September contract. Now it's digesting those gains. And I'm going to take a look at the some of the questions I had. Would I look at the SPX in a little bit more detail? Yes. The S&P is making a peak E in the 120-minute chart right now, a possible peak D in the daily, but the stochastic is at 91% in the daily, and the MACD is good, not strong, but good. The weekly chart, that's the thing. The weekly chart I've got is, so far I'm calling it leg E. Any new all-time high above last week's high of 1985.59 would be very impressive, and extend leg E a little further to the upside, leg D in the monthly chart. So when I look at the QQQ series, in the 120-minute chart, the technicals are very strong. It is probably making a peak in this 120-minute bar right now. But it's a 95.45. It's only down 25 cents, down 0.27%. That's even less than the Dow and the S&P. And it's got 95.18 to 94.96-ish area. Let's call it 94.90 for the moment as pretty good support. And the daily chart is in leg C/E. I'd like to call it C to be parallel with the Dow and the S&P at this particular point. And all of this implies in the Chapman wave methodology that there should still be a leg D to come. So I'm not expecting a huge pullback today. Maybe most of it's already done. I mean, I am anticipating one more move to the upside. I must say, it's a very selective move at this particular point. There are some Dow stocks that are still holding very well. And in that context, when I look at the very broad 2,000, almost 2,000 stock New York Stock Exchange, leg D in the weekly, leg E in the monthly, peak E in the 120-minute chart, and probably a peak D in the daily with an up channel resistance level that has so far become a repellent. Isn't that fascinating? Remember that technique that I use in the Chapman wave methodology called the inside track, where not only do I draw a channel, actually you can do it without channels because it makes a little mini channel itself. But basically what it says, that this entire area where the green line would be a breakout and the red line is the repellent zone, start of the repellent zone, we are seeing the NYA, the New York Stock Exchange, being repelled right now down 73 at 11.031, down 0.66%, way more than the 0.43% of the S&P and 0.39 of the Dow, and certainly that 0.27 of the Qs. So this is saying to me, watch the 9-period exponential moving average at 11,019. Let's call it 11,000 for now. A close under that would say, be a little bit careful. You could still get one more spike to the upside as the Dow and the S&P make that leg D. But that would probably be leg E in the New York Stock Exchange. And then we must look to see, is strength remaining as a potential pullback occurs? Is a high-level consolidation? Or, in fact, are we turning down much more sharply? The dollar should have been rallying very strongly. In fact, it's running okay. It's up in leg B in the index itself. But when I go to the contract, the U contract, the September, that's only a single leg A, and it hasn't been able to break above the resistance at 80.59, 80.60, which is the 200-period exponential moving average. And we'll just go to the EUR, USD, so we covered at the beginning of the week. And that's not very good, kind of lagging the euro-dollar currency pair. The 120-minute chart says at 1.3596, it needs a lot of energy to get to the 200-period moving average at 1.361. More likely, it might test a little bit that candle of at 7 o'clock last night. 7 o'clock last night. Well, no, 7 this morning of 1.361. 3585. That's the low that we're going to watch real closely. And I'll just do this because people have asked me. I don't actually trade it. It's USD JPY, pulling back quite sharply in the 120-minute chart, just under the 200-period moving average, and also just under the 9-period moving average in the daily. So this is going to watch the 101.72 level on the downside as support, and 101.95 on the upside for potential retests of the recent highs back at the 102.25 level. I think we've covered a chunk. Just wanted to go to the HGX, which is the home builders, pulling back after a peak C. Could be an alternate count, but in the meantime, I'm looking at the Philadelphia Housing Sector Index at 205.98, down 2.41, down $1.16%. Must hold 204s, otherwise it's in trouble, because 203.22 will be the 9-period moving average of the weekly chart. A close under 203 by Friday afternoon, not good. A close above 210 to 211 resistance, very good. So I think we've covered those. Now, what I want you to do, see, over the weekend, I did a lot of work on these different trends, a lot of the IBDs. I did a lot of small caps. I wanted to look, oh, that's right. I wanted to show something. I've been talking about, this is very interesting, the continuous contract of natural gas. I've been saying, based on that continuous contract, I did not like the candle that was formed back on the week of February the 28th. Because it made a high, recovery high, and then plummeted down. And then it made the H pattern that I said invariably goes, if there isn't strength that can take it above the arch high, it invariably lands up making a lowercase h, and that h becomes repeated for an M pattern. Well, lo and behold, we've got that exact pattern right now. But this is what I found fascinating over the weekend when I was looking at it. Besides the fact that I've been talking about natural gas, had some emails and had some questions here in my Tiger Technicians Hour about natural gas, I think that natural gas needs to come down a little bit more. And that's why I said not to buy it. I didn't think it was worth buying. I still don't think so. Now, I've got two different chart formations. The NGU, I wonder if NGQ is what we were looking at. An NGQ, which is the August contract, September, August, is that correct? How can it be? Yes, August contract, made a peak D in the weekly, plummeted under the 200-period moving average, and the technicals are not that good because it's breaking underneath key support levels in the 4.29 area. Now, what's also very important about this particular chart is that if I go to the continuous contract, NG again, look, there's that pattern. It's a different pattern altogether. So sometimes people warn me. They say, we don't use continuous contracts for our trading. I agree. For trading, you just want it as a backup of the actual contract itself that you're trading. But at the same time, most of the charts agree very well, but not natural gas. The continuous and the actual contract, the August contract, very different chart patterns. Basil Chapman, Tiger Technicians Hour, day of rest. Down 58 in the Dow, down 8 in the S&P. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Yes, we're back. Dow's down 62, S&P's down 9, and I'm looking at the bonds. The continuous contract shows a very interesting pattern. It's a rising wedge formation with the H that goes to an M pattern. Broke to a lower low. The low of the 5th of June at 134.5 was taken out because it went to 134 and 11 seconds on the 3rd of July. What's interesting about it is that H pattern can continue to form. The most important thing is that if it takes out the left side arch and closes above there, and this is a daily chart, so it would have to take out 137 and 12/30 seconds, the high of the 27th of June, that would be very impressive and say they're probably going to go retest the high that was made, 138 and 10/30 seconds. If I look at the USU contract, that's a September contract, has pretty much the same pattern. This time it made a G, a right arm extension G in the that was in the daily chart on the 29th of May, then pulled back. Now what I'm finding fascinating here is that I had spoken about this for some time. I'd said that the range that the yields have been in, not unusual. We've seen this kind of range for a very long time. And I'm showing it right now in the weekly chart. Look, you went very quickly from an A to a B to a C, but not very much in points, just fractionally higher. One high was at 30, in the yield is 3.492, pulls back, then it goes to 3.4. 3, 4, 5, 1. And then it pulls back, and then it goes to last week's high of 35.16. No big deal, but it is higher, and it is making a very quick A to B to C. And that's something that I need to watch very closely, because that kind of pattern very often fails, and this is a very strong breakout move, and that would say that yields suddenly go above 36, 3.6. So let me get out of that, because I wanted to just discuss it in terms of what I'm seeing. Still see a range. I think that the Fed's very happy to have yields in a range, high, low, high, low, high, low, and confuse everybody. In the den, there was a question about TRIP, which is TripAdvisor. Is that right? No, TRP is not. It is Trans-Canada Core. Very interesting. I say very interesting because I just don't remember seeing this before. So it's A, B, C, D, E, F in the monthly, then it pulls back and it starts another A, B, C, D, double top E, just slightly high, that's E. And now it's making a little mini attempt at an inside buy signal to buy mode. So the monthly chart so far is still looking good. Don't like the action the last day. Well, that's today. And then the weekly chart of TRP trading 47.25 down 69 has us at A, B, C, D. This is leg E and probably peak E this week if there's no new high above last week's 48.18 high. I would just say to you, if you're long, I would take a little bit of profits here, or I put a stop on some of the profits. Maybe it's 47.27. If you've done well, 47 round number low was to 26th of June. I'd put it just 10 cents under that. If you're a long-term and holding, you like the outlook, then A, B, C, D. This is a doji peak. It says in the daily chart there could be a shorter-term consolidation. Watch 46.50 to 46. If it takes out 46, I don't think there's any issue about the low of 45.72 being hit. I think it'll be hit quite quickly based on the weekly chart, because that's going to deteriorate if it starts to head down now, a point and a half or so. So what I'm looking at here, the question is, what about it? If the question is, for me always, would I buy it or would I sell it? Trans-Canada Pipelines. Yeah, I remember hearing the name. I just don't remember seeing the chart ever, although I know that we had a couple of Canadians and some people from the Halifax area looking at these particular stocks a lot. And in this particular instance, I'm going to suggest something that says, just not based on my fundamentals, because I have no fundamentals on it, I would suggest that it's in a trading range. If it breaks into the 48.50s, I think it could go quite a lot higher. But I think that the 48s is going to be, the low 48s is going to be, the lower 48 states are going to have a lot of resistance. And my thinking here is that you've got to expect some kind of a consolidation towards the 46.50 area. And if it takes that out, 45.77 is a 200-period exponential moving average support. I don't know if it's going to go there just yet. That looks like for later on. But in the meantime, I'd just be a little bit careful. Made a recovery high the other day. Is that just a recovery? Yes, a recovery high the other day. The most important high is at 49 in the 49.60s. 49.60s. So it's about 2 points away, 2.5 points away from that. Yeah, if you're holding it, I'd hold it. I think there's a dividend as well, but I'd be a little bit careful if it starts to break. The high 46s support. I'd just take a little bit off. You can always put it back. I'll be right back. Basil Chapman, Tiger Technicians Hour, Dow's down.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back, and just during the break, I got an email from one of our listeners. It's in news about country to boast largest mall in the world, world's largest shopping mall in Dubai, largest indoor theme park. I mean, it's just coming one by one. I used to think I'd look for them every few months or 6 months. Now what we're getting is information on man's spending ego, the time freeze, quicker and quicker. And it's just very interesting that that's going on. So TripAdvisor, that's what not TripAdvisor, sorry, Trans-Canada Core. In a trading range right now, and the trading range suggests that there could be a bit of a pullback here, but so far it's holding very well. Stochastic in the weekly is at 90%, stochastic in daily is at 81%. So that's what I'm looking at there. And I wanted to also question, let's see, what was that question? Oh, that's right, the VIX index. So I have a signal that's already flashed today that says there's a chance that we could get one sudden burst of energy, and that would correspond within the next 2 days. That would correspond for me with the next leg up. So day could make peak C, and then maybe we get leg D, maybe even an E or an extended D over the coming few days. What's really important about that concept says we're getting real close to some kind of a pullback here. I don't know. As I said to my subscribers before, weekly charts are fantastic. Monthly charts are great. And for the last pullback, we waited until the last moment before we went short, and we covered with just the most fractional loss, 10 cents, I think it was. On it's nothing. And hopefully we can time it again, because it is saying, based on the volatility index, now this is the first 2 hours of the week. You can't really extrapolate from that and talk about the Friday. But I am suggesting that what I'm looking at here is an inverted stalk leg formation, that we've just gone to what would have been leg D, so there could still be another little pop to the downside, but it doesn't have to take out the high that was made today. Inverted, it's the low of 10.28, and that we could be very soon headed towards the upper part. It doesn't mean to say you got a major sell signal, but it does say that the weight of evidence is suggesting, based on the divergence between the technicals and the price itself, that this was a somewhat emotional pullback, and that there should be another test, and then we will see whether for the end of the week, the VIX is now testing the 13.50s, 200-period exponential moving average, or if it's just stuck in this 11 to 10 area. That's just going to be really important. Weekly chart, of course, had a very ugly candle last week, closing at the low. Now what we're looking at is a gap to the upside, but we had a gap last week to the upside. So, and yet we didn't take out 1034. This morning, the week before. Then last week we took it out by going to 1028. Today's low so far is, in fact, 1101. So I'm going to be watching the volatility really closely. Now, I had a question, what about your positions? Well, we are long and we are short. And one of the reasons I wanted to stay in that particular commitment at this particular time is the longs are doing nicely. Not great, but they're doing nicely, a little bit better than the market. And that to me is important, number one. Number two is, in the positions we have, I'm trying to go to under the radar positions where most people would not be, or in positions that I think have much better longer term prospects, because I want to see how these stocks hold on any pullbacks that are coming. And a short position, one that we've got in particular that I'm looking at right now, is pulling back close to the low of the day, and it has not participated at all in the rally. And to me, that's the way you've got to look at this market, that there are stocks that are totally participating in up moves, and there are stocks that are totally unparticipatory. But if the market pulls back and they don't pull back, it says, no, they're in their own little orbits. They don't get carried away, because they will have internal strength and they're not going anywhere. They're just stuck in range. But if the market pulls back and they are opportunistically pulling back as well, because they don't have the weakness and that's their trend, then that's what you want for the short side. So I hope that clarifies some of the things that I'm looking at. And so I spoke about bonds, running some. I didn't do the TLT. Here is a TLT, trading at 111.72, up $1.04, having, well, I would say it's an island reversal. I find those useless when you're talking about the TLT, because they always have that. They trade on overseas information, overseas news. So what I'm looking at here is that the weekly chart is the most important, because if there's a close in the TLT under last week's low of 110.34, not good at all. You're going to go to the 109.25, 200-period moving average in the weekly chart. And most importantly, on the upside, what you really want to see is the next gap to the upside falls above 112.74. And that's a point, just over a point away to the upside. I still think trading range, just what we're looking at in many of the different indices, just at this particular moment. Here's something else that I looked at over the weekend. We don't have any position now in this particular ETF. I will get a position. I'm waiting to get a position. And maybe I should have started it this morning, but I think that this is a leg C to the upside, probably peak C in the IBB. This is the iShares of the NASDAQ Biotechnology ETF, trading at 261.88, down 4.25, down $1.60. That's down 4.25, 1.60% down, which is 3 times almost the S&P percentage down. And I'm looking at it and I'm saying, okay, Mr. I think that you're going to tell me a huge amount of information this week. You're up against resistance, but if it's not peak C, I'm not sure what the count could be because it is, how can I put it? The count is, I know what I wanted to say. The count isn't subsidiary to other aspects, but why am I not able to get my chart exact? Just a minute, folks. I need to do this. That's one. Now put it back. No, I'm having a problem here, so I don't know what to do. So that's the IBB is showing that it's in peak C. If I had to call it an alternate wave count, it would be A, B, C, D. Maybe it is a D. Maybe I should have counted it that way. There could be alternate counts all the way around. In fact, most of the charts, important charts, are at points that have a possibility of an alternate count. It'd be a shame to miss a very nice short just because. Let me just see what's going on here. So if I do that, that expands it, and that means that I'm using up the full width. If I do that, it means that I've contracted it, and I should be able to break into the, I'm not sure what's going on. So let me go here, and let me go back to here. Let me go to this one more time. Let me go back to it one more time. I am not, that was silly. Hey, what's going on? There's the weekly. Oh, there it is. Sorry. That was my mistake. Okay, everything's okay. Move on, folks. Move on. Here we go. That's the daily. That's the weekly. And there's the monthly. I wondered what happened to that monthly chart. There it is. Okay. So IBB, leg B in the weekly chart in a retracement mode because the all-time high of 275.40 February of 2014. That would be the target to the upside. If this is going to make a V or a U-shaped pattern back to the old top. That could happen because the weekly chart is still at 90% in the stochastic, and the MACD is expanding, and in the monthly chart, the MACD is still good. The daily chart's the one that had me a little confused. So if I did that as an instant restart, this is A, B, C, D, then we could be looking at a potential pullback. So it doesn't mean that it has to pull back just because there's a D or even a C. But what I was looking at, if I can just find it here, is that in the 120-minute chart, we had made a peak D. We had gone in the inside track to the line, the red line that often denotes a reversal pattern, and as such, I had to be careful. So I'm just watching this, and I'm saying to myself, what happens next? Whether the IBB this week breaks above 268.5, that's 7 points up, or in fact that we've started a sell-off that's going to increase and it's going to close under 259, the 9-period moving average in the daily, to say, hey, you might call that peak C, but it's really an alternate wave count. I need to watch this really closely. Why? I went through a number of stocks over the weekend, like BRIB. BRIB is in the daily chart. I've got it as an alternate count, F/B. And the stochastics at 90%, and the MACD is still very good. The weekly chart is just climbing the 9-period moving average. So I don't want to do anything untoward right now, because the IBB has basically been a leader. It's been part of the momentum stock up move since the lows that started when the sell-off occurred back in April. So let me look at this one as well. I'm going to go to Amgen. It's one that held very well. Yep, it made a new recovery high today. It's in leg C in the weekly chart. Leg F maybe in the F/C in the daily, and the monthly chart is still in at peak D. So Amgen at 121.43, down $1.42, acting poorly on the day, but still acting darn well if you look at the candle of Friday. So we need to watch these and monitor them very closely. Would I want to buy any of these biotechs right now? I find that they're a little extended, some of them are a lot extended, and I'd be hesitant to do that. Let's look at CMG, which is with an alternate, was an alternate count, and then it went to D on Friday. Now it's a peak D. I'm watching this closely because with all the higher prices I would not be surprised to see, even though they come up with some really good reports, I would not be surprised to see Chipotle, Mexican Grill, not get to the 622.90 area, at least not just yet, without a digestive phase coming up as we speak. And that's going to be telling me what to expect in the monthly. If CMG at 596.40 down 7 breaks 591 to 589 support, very important support, that'll be a big negative in the weekly chart. So I'm just going to go step by step. We don't have a position. Looking at AZO, another one of those triple-digit movers. 537.52, only down $1.94, having made leg D. There's that pattern we've been looking at over and over. There's the pattern that says, watch out, I could in fact start a move that takes me above the 546.70 high of the week of the 15th of May. And that would say that, hey, I could make a rectangle formation trying to test 561.62, the all-time high. So let me look at Celgene. I think I wanted to get some of the other components of the IBB. Celgene is making a leg D, possible peak D, but it broke out to new recovery all-time high in leg C in the weekly. And I don't know what it is in the monthly. It's A, B, C. It's probably leg D in the monthly. So far, this is great action. So I don't want to jump ahead by being too optimistic in the biotechs or being too pessimistic in there. I just want to see the chart patterns, see them unfold, and then stop doing what they're supposed to do. AA has reports tomorrow, made a peak F in the daily at 15.18. It's a G/C in the weekly chart, and a huge leg B, A to B, from 763 low to the current price of 1483, which is just off the 1518 recovery high. So this has been a spectacular move for Alcoa. We're going to see, this is a very important report tomorrow that's coming out. So I said, did I look at GLD? No, I didn't. GLD's in leg C, should go to a D in the daily, and the weekly. I've got this as a leg B. I don't even know what I could call it other than this leg B, and a leg E in the monthly. So that's saying Gilead Sciences is really a marvelous stock. It's acting so well. It's gone way above the pre-split price. I had it here at the pre-split price around about the 73 level at peak E way back, and it was actually leg E. And look where we are now. We're at 87.68, above the pre-split price. So I think I've gone through a chunk of what I want. Oh, the IYT. I'd have to take your calls. There'll be plenty of time before the break, before the final break of the hour. So IYT is the big question mark here. I've got it as a peak C today if there's no new high. Did this recycle over there in the instant restart? Because you've got to, one of the things about the Chapman wave methodology, when there are alternate counts, which doesn't happen often, but when there are alternate counts, you want to make sure that you've got the best count possible, because under those circumstances, if you miss the count and you're expecting something that doesn't happen, that can be very costly. Rather, just step aside for a moment and say, the price has to tell me. So the stochastics at 85%, MACD's just deflected lower. I'm watching the IYT real closely. I'll give the alternate count when we get back. I'll draw it in a different color so you can see what I mean about the Chapman wave instant restart. Dow's down 74, S&P's down 10. I'll be back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Ignitions Hour, and we are going to go straight to our next caller. We got John in Philly. First caller, John in Philly. Hi, John. How are you?
Hey, Basil. I'm glad to hear you and your family had a great July 4th weekend.
Yeah, it was very nice. I hope yours was as well.
It was indeed. Basil, in the time remaining in this slot of yours, I'd like to ask you if the Chapman Wave analysis gives you any evidence, any clues, if you will, that the NDX cash index, which just made a new all-time high today, 39.24 rounded up, is forming a top right here. I have a couple of things myself. One, some pattern considerations that I do. And number two, my application of the DeMark sequential system, having given a sell signal, which at this moment in time, however, is not yet confirmed. I'm looking for reasons to think a top is forming right here. Any evidence?
So let me just get to this before we run out of time, because it's a great question, and I'll deal with it a lot more tomorrow. But I'm looking at this, and I spent a lot of time over the weekend just trying to fathom what kind of a top would be forming right now, how this whole socioeconomic skyscraper aspect and mega trend aspect that I'm talking about. And if anyone wants to read, it's still valid today. The chapter I wrote, the chapter 13 in the book on the psychology of investing, the chapter 13, it's actually reprinted in TFNN in the education section, where I looked at the Dow going much higher to the 17 and 19,000s. It took a long time to get there, 14 years. But in fact, everything that I've been looking at is starting to unfold. And it says to me that declines, unless we get some kind of a smash to the downside, and then there's a whole new bull move that would take at least a year and a half, pullbacks to the downside could in fact be short-lived and very sharp, but abrupt, but quick, and get them out the way. That's kind of the way I'm looking at it right now. I don't know. But on a shorter-term basis, my NDX 100, I've got two indicators that are saying, be really careful. The upside might be a little bit limited here, but if, in fact, the NDX, which is trading at 39.07, down 15, and any time in the next week takes out 38.49, and certainly if it takes out 3800, I have to consider that there's a weekly sell signal that's going to, there's a sell mode in the daily and a sell signal in the weekly, and that'll bring that from 98%, that'll bring the stochastic down. But as long as the stochastic's at 98% in the weekly and 94% in the monthly, I have to consider that there's internal support and that we've got the rotational aspect, as we can even see today, where we have longs and shorts and they're working in the correct order. I think that I see a shorter-term sell-off imminent, probably this week.
Could you please tell me, you mentioned 38.49 as a pivotal mark.
Yes.
What study does that come off, please?
That doesn't come off of any study. That comes off the 14-period exponential moving average.
I see. Very good.
And it hasn't broken under that for months. The last time it was under it was back in May of 2014 on the daily chart. But that has been a pretty important moving average for the downside and any downside move. So I hope that helps you.
It does. I'll look forward to listening to that analysis of yours on NDX tomorrow. So thanks so much.
Thank you. Thank you very much for calling, John. John and Philly, we're looking at the NDX 100, and it corresponds, folks, to the QQQ, which I have as an alternate account, CE, and the NDX, which is the root. Only has, it has, what did I put? Oh, I just lost it. Has slightly different count, but it's equivalent to the same sort of thing. Folks, stay tuned for Larry President's. It's a great program all day today. Don't forget my services, the opening call, and watch that volatility index. And I got a little sign that says there could be some kind of rebound in the next day or two. Everybody be careful. Hey, thank you for being here. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.